So if you've been trying to keep up with what's happening in the world markets lately, wow, you need a seatbelt and a neck brace because man, this is a roller coaster. There is so much volatility going on. 1 minute, tariffs are on, then they're off, then on, off, on. At this point, you need to check the headlines hourly just to stay on top of it. But what I do know is this is creating economic uncertainty unlike anything we have ever seen. And it's really making real estate decision making a whole lot harder. The US Fear Index, it hit a 3, the lowest it has ever been. And the reality is that even in Canada, no one has the confidence in anything right now. People simply are not moving. Not buyers, not sellers, not even developers. Everyone is frozen, trying to figure out what the numbers are going to look like tomorrow, let alone a year from now. When materials and construction costs might suddenly spike, developers hit pause. Buyers start waiting for deals and prices to come down. And investors, they're worrying about shrinking margins and should they offload projects to protect their capital. And this just isn't theory. It's showing up in the spring real estate market, which is traditionally one of the hottest times of the year. And right now, even in Calgary, it is dead quiet. Listings are rising, buyers are hesitating, but prices are fortunately remaining steady. Let's take a look at what March 2025, the statistics are actually telling us. Well, condos, the benchmark prices are up 3% year over year, but more supply is being brought to the market. This means more options for buyers and renters, so landlords and sellers need to be aggressive right now to get units moved. Townhomes, prices are up 2% year over year, and inventory is building a little bit, but there's also less price pressure. Detached houses, the benchmark price is up 4% year over year. It's still very tight under 700,000 and a much more balanced market over 800,000. Yes, inventory is up. Yes, things are leveling out. But is it a buyer's market? Not even close, especially if you're under that $700,000 price point. Keep in mind, prices are still rising, just a little less frantically than we've seen over the last 3 years in Calgary. So what does this mean for you, especially if you're an investor? Well, let's put this into perspective. Despite the slowdown, sales are still stronger than anything we'd seen from 2015 to 2020 when Calgary was grappling with job loss and a very different economic picture. We are not crashing here. I don't even think Calgary is correcting because prices are still going up year over year. We're seeing things slow down simply because of global economic uncertainty. With significant population growth, low vacancy rates, relative affordability, and interest rates continuing to be cut and trending down, Calgary is still one of the most compelling markets for long-term real estate investors in Canada. Unlike Toronto, where cash flow is a complete pipe dream, Calgary is still producing properties that have break-even cash flow or better, even at today's interest rates. So if you're wondering whether to wait or to make a move, the answer depends on your strategy. But one thing is clear. Calgary's fundamentals remain strong, and smart investors are staying in the game. Now, don't forget to like, subscribe, and let me know what you think of the current market volatility in the comments. Otherwise, let's take a look at the detailed Calgary real estate market statistics for March 2025. So for Calgary condos, there were 540 sales in March. You can see that it's a little bit lower than the last couple years have been, but it's actually substantially higher than the sales from 2015 to 2020. And you can see the increase, the seasonality of it. They are increasing, but it's a lot slower because of that economic uncertainty that's currently going on. Now for listings, you can see that it has increased quite a bit. We have over 1,000 units on the market currently, which is well above the levels that we have seen for the last couple of years. This means the sales to new listings ratio is hovering around the 50% mark. This means that about for every 2 units that come to market, one of those is selling. So quite a bit lower than we've seen where it was more traditionally between 65 to about 80%. Inventory has continued to grow, well above the last couple of years, but more in line with historical norms and averages. The key here is to see if inventory does continue to keep growing and if it comes down in the later part of 2025. Months of supply is sitting at just over 3, which is technically in a more balanced market and well above the 1 to 2 month supply that we've seen in earlier years. The days on the market, this is actually good, seeing that it has come down, sitting at 36 days on market on average. But what's the proof? Benchmark pricing. Overall, it has been pretty flat over the last couple months, and you are a little bit below the peaks that you had seen in April and around August of last year. Now over to townhomes. The sales as well, quite a bit below what we've seen over the last couple years, but still above the trends of the last 5 to 10 years. New listings again have spiked, not quite as high as other years, but well above the numbers that we'd seen more recently. Sales to new listings, similar to condos, you're at about 57%. So a lot of this new inventory is not being absorbed by the market, and you're seeing inventory increasing. Again, much higher than the last couple of years, but much lower than the previous years that we had seen. Months of supply is sitting at a very healthy 2.1. This is very close to a seller's market and well below the 5 to 6 months of supply that you'd seen about 5 years ago. Days on market continues to trend down, sitting at 27, which is very healthy. And you're seeing benchmark prices continue to increase slightly. Similar to condos, you are below the highs that were set last year, but it is trending in the right direction. And then the detached market. Same as the other ones, you've seen sales increase throughout 2025, so no surprises there. And you're pretty much in line with the sales levels that we'd seen from the past couple of years. New listings, again, very similar trends to the last couple of years. And sales to new listings ratio, about 55 to 60%, same as townhomes, really same as condos. Inventory here is starting to build like you see every year, but months of supply back at 2.1, very healthy market, pretty much near seller's market. And that's where anything under 700,000 is probably in a seller's market. Anything over 800,000 is in a more balanced market. Days on market, very close to 1 month, which is very healthy. And for the benchmark pricing, you have seen the prices continue to increase and you are slightly higher than last year's.